Hi, this is Rob Warlow from Business Loan Services and welcome to my Friday Business Finance Bulletin, my weekly roundup of news, tips, ideas and strategies on raising finance and dealing with banks. So what have I got for you this week? Well, we're looking at the bank appeal process, where banks have been asked to relook at an application and hopefully turn a no into a yes. We're going to have a look at mini bonds, and we're also going to have a look at an example of a high street bank now linking up with a crowdfunding site. As you can see, I'm on location again today, and I've just had a chance to interview somebody, which you'll see later on in my tip of the week, about raising finance via equity. So let's start off with a bank appeal process. I've mentioned in previous videos that all the high street banks now have a formal loan appeal process in place, where if you've had a no from the bank and you genuinely feel aggrieved, you can go back to the bank and ask for somebody independent within the bank to review it to make sure that the bank really has come to the right decision. Now, there's a guy called Professor Russell Griggs. Every year he comes out and just goes to all the banks to review the files where the banks have said no, just to see how the process works. Well, this year, the reports just come out, 3,518 businesses approached the banks and asked them to relook at their request. And there are successes coming where no's are turning into yes. And in fact, during that period, an additional £13 million worth of borrowing was generated by turning that no into a yes. And on average, since Professor Griggs has been looking at this whole process, on average about 39% of businesses are getting a yes from a no. So certainly worthwhile you looking at the appeal process of your bank. Now, one of the other things that Professor Griggs always looks at is, well, why were banks saying no in the first place? And interestingly, the top reason why banks say no, 43% of them will decline because of a poor credit score. Now, we had a look at this in my previous video in episode 30 about how important it is to maintain a clean credit file. And the findings of this report really justify that. You've got to make sure that your credit report is very clean, no defaults. But if there are defaults, go back and explain. And this is one of the reasons why business owners are managing to turn that no into a yes. Because it's a case of previously perhaps a computer saying no, and a human being looking at a file and looking beyond just what's included on the credit file, having an opportunity to hear the story behind it. So as I said, if you've had a no and you want to go down the appeal process, just go into your bank's website, type into the little search box that they no doubt have there about an appeal process, and it'll list there exactly what you need to do. So, crowdfunding. An interesting development from Crowdcube.com. Now, Crowdcube traditionally are in the equity field, so if you're looking to sell equity in your business, they'll go out into their investor base and people will put money in to buy a very, very small share of your business. Now, Crowdcube has realized there's an opportunity to launch something called a mini bond. Now, what is a bond? Well, unlike traditional lending, whereby you take a borrowing and you repay it every month or every quarter, a mini bond is very simple. You have a set period. So you borrow the money for, say, 3, 4, 5 years, and you just pay interest on that debt. And then at the end of the period of the bond, year 4, year 5, you either pay it off in one lump sum and pay the investors back, or you refinance it elsewhere. So Crowdcube have just launched their own mini bond program. And so how it works in that way. They put it out to their investor base, hey, we've got a business here looking to borrow money, and they are offering interest of whatever it may be, 8, 9, 10%. Now, they just launched their first one, which is a £1 million bond for an investment in a restaurant chain up in London, and they're paying 8% over that period. So it's a good way of literally bypassing the banks, not giving up equity. So if you want to check that out, go to crowdcube.com and see how that is working out as regards to the launch of their mini bond. Sticking with crowdfunding, I've mentioned quite a few times where I think banks and crowdfunding are going as regards partnerships. I took the view, and always have done, that eventually banks will start partnering up with crowdfunding sites. Because hey, at the end of the day, banks don't make money on smaller deals. It just doesn't work out on a £25,000 loan. The interest is so low, what do banks make? And I've always thought that banks will eventually partner up with crowdfunding sites. Well, it's just happened. This week, Santander announced a strategic tie-up with Funding Circle, where their smaller stuff is now going to pass on to Funding Circle. And so it'll be interesting to see now which other banks follow suit. So keep an eye on that. So if you're a Santander customer, in time you may see them saying, do you know, that loan's too small for us, go over to Funding Circle. So, equity as an alternative form of finance for many businesses, and something that many business owners don't get because of the idea of losing control of a business by selling shares doesn't sit comfortably with them. Well, today I've had the opportunity to have a chat with Alister from Lucid Ventures. Now, Lucid Ventures help business owners raise equity via city funds or via private individuals. So I had a chance to catch up earlier with Alister and to ask him about some of the issues about mindsets, problems that business owners may have when it comes to raising finance and what business owners need to think about. Let's go to that interview now.
Very important to remember that when you are looking for an equity investor, you will be giving up part of your business. So that will mean, in some cases, that you have an investor that will take a great interest in what you're up to. You are therefore under the microscope. This, for some people, will preclude it being the right solution. Some businesses do not like to run with outside influence. However, this can also be very beneficial because often the investor will be a very established and experienced business person who can add real value in terms of the dynamic of running the business. So that mindset has to be absolutely right. And if you're not comfortable with giving up part of the ownership of your business, then alternative traditional funding methods are probably the best way forward. Any equity investor that comes in, and this is a very important point to remember, will be looking for an exit strategy. So they'll be looking to sort of a clear timescale as to when they will get their money back, be it 2 years, 3 years, 5 years, and they'll be very, very interested in how they're going to get an uplift of their investment. They'll want to understand where the business is now. Is it tidy? Is it well run? Who are the people involved? And most importantly, where is the potential? Now, some equity investors are quite daring, they're quite brave, and will make a snap decision based on the personality and the business, and sometimes will make a decision in a couple of minutes based on their gut feeling. But the majority of equity investors will want to really understand how your business operates, will want to understand where the business is going, but most importantly, where is that exit, and what return are they likely to achieve upon that exit. So there's a lot of work to do, however it can be great fun.
So some useful tips from Alister there on raising finance via selling equity. Hope you found that useful. So that's it for this week, and if you enjoyed the video, please don't forget to like it or share it amongst your colleagues, and I look forward to being with you again next Friday. So have a great and profitable and successful week, and I'll see you next Friday. Bye bye now.